Hi, I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. So today we're going to really kind of go through a little bit of an update on OPEC, China, and then we're going to do a quick geopolitical recap just because of things that have come out since we last spoke. And then we're going to wrap up with our favorite topic, the Primary Vision Frac Spread Count. So just to jump right in, we're going to look at Angola. So Angola was kind enough to come out with their September loading schedule, and shockingly, it's up by about 210,000 barrels a day. Now, given it could adjust, it could go, they could increase it, they could decrease it slightly, but it's worth noting that this is a point in time that you're supposed to be seeing some of these reductions. Now, given Angola wasn't the same type of cheater that we saw from Nigeria and Iraq, but again, this is meaningful. This is a meaningful size, and you can see just from the chart here how we've gone from 1.3 right down to 1.1, and now we're right back up. And something that we spoke about earlier was really the West African storage. So this is another issue in terms of just where is this oil going to go, given how China is sitting in the world with a significant amount of crude sitting offshore, onshore, because a lot of this Angola flow ends up going into the Asian markets. And when we consider what estimates are for crude demand, this is where things get a little wonky. When we think about, okay, well, what are the IEA, EIA, OPEC saying? And we have a magic decline. This is a view that you're going to have demand going up, you have supply coming down. But again, demand remains fluid. As we've continued to talk about, we've been more on the bearish side of the demand cycle. And so far, we've been, pretty spot on in terms of where we've been on the demand curve. And that's why I struggle when I see this, because we have a lot of different people who have been cheating. Again, Iraq, Nigeria, Angola. Will they comply? Will they not comply? What is going to happen in the world? We have Norway, we have the U.S., we have Brazil, all in their own type of way increases, or at least not decreasing as much as expected. So when we consider the supply side and how we're going to get to this deficit, we really have to look at these demand estimates. And the demand estimates continue to get worse, just based on where the estimates are. We still believe that we're closer to 10 to 12 million barrels a day off of where we were last year. And specifically where we were, in Q1, because we obviously came off pretty aggressively, reaching about 35 to 37 million barrels a day of demand loss at peak time. And we continue to see the slowdowns across the globe, especially as some of these guys come back. Like Italy has come back to a certain degree, but yet they're still down 15 to 20% across their demand cycle. So there's a lot of these spits and starts in terms of, well, where is that demand really going to come back, and can it be sustainable? In the US, we've seen some of this stuff get normalized. Now we're starting to see things roll back just as COVID continues to spike within the regions. And when we talk about demand, we really have to look at, okay, what is traffic doing? And these are just some specific roads and obviously very crowded areas. You're still not seeing where the averages are. And this is why we focus so much on miles driven, because the miles driven continue to fall. And when I say fall, because obviously we bounced off the lows, but now we're starting to come back. We've plateaued, and now we're starting to see things come down as you have COVID cases start to rise in some areas, and just inherent issues with discretionary cash. Like some people just don't have the money available to go to dinner, to go to a tourist attraction. Instead they're going to parks, as we showed this past week in our economic show in terms of the mobility data. It's very clear that this is a continuing trend that isn't going to be shaken as we go through the remainder of the year. And this is, something that we also showed that we showed this on the previous show, but we really want to hone in and really talk about where we sit and how we're really starting to kind of hit that plateau and flatline and as we go through the remainder of the summer, because that the summer is really where you get those activities, and you're not going to see tourism the same way. You're not going to see travel the same way. And now we're starting to see that rollover as some of these industrial numbers start to pare back as we go through July and into August. retail sales continue. Retail sales have been better than expected, but you've also had retail traffic start to fall. So these are things that are going to continue to weigh on the way people are moving around the world. And when we think about around the world, everyone keeps talking about China. So there's two different interesting components to the Chinese story. One is they are buying less overall when we consider where they were buying aggressively in April and May. And as we talked about in March, they were told, by the government, like, look, delay as much as you can in April and do not buy anything in May yet. So that as they got through the halfway point in April, all of a sudden they realized things were getting a little bit better and they ran out and bought everything they possibly could for May and then in some June deliveries. So that's why it's natural to see some of these Chinese crude flows really start to pare back. But when we consider the size of the tankers, there's still a significant amount of super tankers heading to China. Now, when we talk about China, we always talk about different capacity and components of it. And it's really important to make a designation between oil in transit and oil in storage. This is picking up oil that is currently transiting into China. It doesn't mean it has to reach China. They've already, South Korea has already purchased some oil that was sitting offshore, just offshore China, just because they started to normalize. You have South Korean refiners that have increased about 5 to 10% utilization rates, depending on where you are. And this is going to absorb some of that additional flow. But even if you have crude coming out of storage, specifically floating storage, you're going to get that replacement, which again is going to keep a cap on those numbers. And now that we've seen, commentary from Congo, commentary from Angola, that some of that crude is the purchases are starting to slow, but yet we have Angola ramping up. So again, there's a lot of conflicting data points. And that's why, just to reiterate something that we spoke about, again, is just this crude floating storage chart. And you can see, again, we're still remaining at all-time highs. And as these super tankers or VLCCs or ultra large crude carriers or ULCCs start to show up, you're going to see this kind of flat line. And you're going to get some drawdown as India normalizes, China, South Korea starts to pull more through. But again, China is going to be a huge absorption of this crude that is in the market. And they continue to have supply chain issues, because on the supply chain level, they're testing everything that comes through for COVID, and you're getting these huge bottlenecks that are really impacting the port and making it difficult to get things through and really operate on a normal level. And now when we talk about China and a lot of these bottlenecks, we really have to turn to the Three Gorges Dam. Now, this is something that was finished in the early 2000s, and there's a huge problem now because you have a significant amount of flooding. Now, this dam was tested in 2017 when they had record amounts of flooding, but now we're seeing even more, and we're seeing this essentially the dam being tested to capacity. So they've now released and they've opened as many of their floodgates as they have. It's 5 main ones and all of the spillways, which is in preparation for what they know is coming, because over the next month, they know that there's going to be a huge surge based on the way this dam is created and where it's located, where there's a ton of tributaries that come down that are experiencing flooding. Now, by opening up these massive spillways, they've obviously created flooding, so be it, controlled flooding, if you will, across and down the overall basin. The problem is the amount of infrastructure, the amount of crops and farmland that is downstream. We've already seen, about over 100 deaths. There's missing individuals. There's a huge amount of just impact in terms of farmland. That's why they're out there buying a ton of crops. There's a significant amount of nuclear capacity that is along this river, which could be impacted if this is something that fails. Now, will it fail? Again, only time can tell. I know that there were scientists and engineers that were against the dam, just given that they didn't believe China did the proper erosion studies, the environmental studies. the overall current studies, which is again what's causing the issue, because you can look at it and it can look fine, but what's happening with the soil, with the concrete, and we all know that China increased their rebar standards as of, I believe it was between 2014 and 2016, because they wanted to use, or they adjusted the quality that was being consumed. But this was done before that. Did they spend up? Did they really pay up to get that premium rebar into the concrete to ensure the stability of this dam? And as we know, some of the local scientists and engineers that were against the dam managed to disappear in only the way a Chinese expert can. So this is something that's going to be a problem that we're going to look at, because it's going to happen over the course of the next month as you get a new resurgence of flooding north of the dam. And then there's other geopolitical issues that we're going to continue to follow. Iran is one of them. Azerbaijan and Armenia, they're continuing to have an issue. And then there's another interesting dam in Ethiopia that is going to take about 7 years to fill, which could starve Sudan and Egypt of water. And again, these are little things that are going to be a big impact. But just to close in on the Three Gorges Dam, there's about 400 million people that could be impacted in up to 60 nuclear facilities, 25 that are really close to the actual river, 20 a little bit further away, but it could be a huge catastrophe that would impact lives as well as just the infrastructure power of the Chinese machine, if you will. So this is something that we're always going to keep pay attention on, and we'll come back with any new updates, especially next week. Now that we've had our little Three Gorges Dam update and the movements of some of the militaries that are going to continue to happen, these are things that we're always going to really look at and try to understand what are the implications. But now we turn to our favorite topic, which is the primary vision frac spread count. But we really want to understand, what has happened through June on drilled but uncompleted wells or DUCs. And at the same time, we want to look at, what completions have been done. So when we look at the EIA data, you can see that the DUC count remains relatively stable and has really increased through the Eagle Ford and the Bakken, which is just giving us enough running room as we go through the back half of the year to really start to see some of this work get done. Because in the past, we've talked about, how many of these DUCs are viable, what is actually going to be used. But when you look at the DUC count, you can see that the additions really do provide a certain amount of running room of things that we could trust and we could start to see really come back. And just to kind of round out, how bad have things really been on a completion well side? I mean, it's no surprise to see the huge drop off, between March into June. So this is something where we really do think we have seen the bottom. We're starting to see some renewed activity, which we'll touch on in a minute. And this is something where you're going to start to see some of these adjustments as we go through, specifically in the Permian. So now to jump into our favorite topic, the primary vision frac spread count, we came in this week at 67. So now while that may sound like, you only increased 3 from last week, it's like, there was a shift in where those spreads were made up. The Permian had a nice bounce where, we had called the bottom saying that, look, this 20, it looks like we're probably at a low here and we're going to start to see these completions, crews come back to work. And just some anecdotal evidence, and we won't give away who, because, that we have our product for that. But one of the operators has now brought back 3 completion spreads, with another one being added this next week in the Permian. And this is just that anecdotal evidence that we're building through company data, boots on the ground, to really come up with, this is the confidence we have that we may never see the Permian at 20 ever again. And barring some crazy thing, we're on that move and we will continue to shift higher. And that's why when we look at it from the kind of trend, in April 10th, we were at 185. We're going to sit within this level, and really the sustainable move up, which we think is going to be between, let's call it between 65 and 85, but really kind of averaging on a rolling 4 week about 75, is really going to be driven by the Permian, the Eagle Ford, and just Texas in general. Appalachia and some of these others step back a little bit. But again, even though the curve and the strip remains kind of against them in terms of where we are, because we will see some associated gas come back with renewed oil completions, there's still enough work to be done, and there's going to be something to be said about maintaining a certain amount of completions within the region. Now, when you think about 67, and when we talk to even getting up to 85, that's still not going to close the gap in terms of where we were coming into the year at about 13.1 million barrels per day and currently at about 10.9. This is not something that's going to see growth. It's a matter of how do we stem the decline as we go into 2021, because this isn't going to really bridge the gap, but it'll slow it and put them in a better footing. So we do think that you're going to get some of this sustainable activity, not getting too excited in terms of we're going to go to 150, but we will see some sustainable growth, specifically in Texas, especially as we have some of the realized prices increasing and going into the export market. So thanks again for watching. On Monday, we're going to have our next segment of conversations with Fernando Hernandez, where we're really going to talk about the offshore market. We go a little bit deeper into API gravities, and then we're going to have our normal segments of the EIA, OPEC updates, our new economy show, which we're very excited about, to really kind of show where do we sit in the world and try to give you an impartial view of all the data. And then obviously wrapping up on Friday with our favorite, the Primary Vision Frac Spread Count. So thanks again for watching. I'm Mark Rossano, founder and CEO of C6 Capital Holdings, coming to you from Primary Vision Network. Thanks again.